on? Yeah, there we go. Thank you, Molly. Good morning, and thank you to everyone for being here today for what I hope will be a very informative and robust conversation with our excellent panelists. For those of you who don't know me, my name is Tamra Hilar, and I'm a senior policy advisor and higher education campaign manager at Third Way, where I've been now for the last 4 years helping to build out the organization's education portfolio, which has spanned all the way from K-12 to more recently post-secondary education, where we spend a lot of time thinking about making sure that both students and taxpayers are getting value out of our higher education system. So I'm not sure how many of you in the room actually started your careers outside of the higher education policy space, but I can speak for myself because I did. I actually originally come from the K-12 policy world. And while I know that K-12 is notorious for having its own sort of alphabet soup of acronyms and insider language, I must say that when I transitioned into the higher ed world, I felt like I was oftentimes being asked to basically learn a brand new language, right? So from understanding what NASFAA means and how to spell that, to what a SURDS is, or a SURDS ban is, or now it's an SLDN, to really figuring out how FEL used to interact with PEL, and so on. So that's why one of our goals at Third Way is to really spend a lot of time thinking about how can we break down complex policy conversations in a way that will be understandable for people who might not be thinking about these issues every single day, or people who might be working on multiple issues. So that includes policymakers and their staff, or the press, or even students and families who care about these issues and want to know how policies are going to affect their lives. But in addition to really helping translating a lot of the wonky lingo that we often use, one of the other observations I made when jumping into this space was really just how complex many of the higher ed policies truly are. And I think this is in large part because so many of the policies in higher education have wide-ranging connections to real people's lives, and not just to, students' financial futures, but also to our economy and to the labor market and to our ability as a country to increase mobility and really close equity gaps for generations to come. So for me, it became very clear early on that a lot of policies in higher ed, while they might sound really good on the surface, if they're not carefully crafted, can oftentimes have unintended consequences for the students that they're actually designed to serve. And hence, this was sort of the impetus for the Behind the Bumper Sticker series event series that you guys are all here today. As you have seen on your chairs, you all have actual empty bumper stickers. And really, this series is designed to sort of explore the kinds of policy conversations that people are talking about in higher ed that may sound like they would fit beautifully on a bumper sticker, but in fact might actually be more complicated if you sort of dig into them one layer down. So you also have pens as we are thinking about future event topics in this series. Please feel free to write down any ideas of topics of things that you've been hearing about that you'd like to see experts come up on stage and debate and have a deeper and richer policy conversation about them. There's actually a basket on your way out the door that you can put them in there. So for kicking off today's discussion is obviously on One Grant, One Loan, which we think fits very nicely on a bumper sticker. Like many of you, if you've spent any time on the Hill in the last couple of months or read the Chronicle of Higher Education, you may have seen phrases like One Grant, One Loan being tossed around as a possible solution for simplifying our financial aid system. With multiple grant and loan options available to students today, I think most of us would agree that the federal financial aid system is complicated and is probably ripe for some form of simplification. However, I think the question on the table today is a one grant, one loan system the best way for getting there? So to help answer this question and more, I'd like to now turn it over to our esteemed panel, featuring Jason Delisle from the American Enterprise Institute, AEI, Sandy Baum from the Urban Institute, and Justin Draeger from the National Association of Student Financial Aid Administrators, or NASFAA. And this conversation will be moderated by the Chronicle of Higher Education's Adam Adam Harris. Adam serves as a breaking news reporter for the Chronicle, where he also provides coverage of developing news, evolutions in public policy, and how institutions grapple with universal concerns. So thank you all for being willing to be here today, and I will let you guys take it from here. Thanks.
Thanks. So we're going to open, I know you're supposed to open these things with a joke, but I don't have any. And so we're going to open and allow the panelists to kind of give opening remarks, 5-minute remarks, and I guess we'll start with Sandy.
Are we going to start with me?
Or Justin, you.
Yeah, how about I?
Yeah.
Yeah.
All right.
I think we drew straws and I got the short
Right.
end. So thank you, Adam, and thank you to Third Way. And Tamra, I want to thank you for saying our entire name in one breath. So that's an accomplishment. One grant, one loan. This is something that over time we in the financial aid administrator business have sort of circled around many times. So this goes back, and I think, Sandy, you were involved many years ago in before even 2010, like we're going back to maybe 05, 06, 07, where we convened a large group of aid directors to talk about simplifying financial aid. And I don't know if it was the bumper sticker, one grant, one loan came out of there, but this concept of streamlining the programs was one of the themes that came out of this. So we've been talking about this for a long time. And as we've circled it, I think some of the issues that we originally thought this would solve, we started second guessing. So in short, it's complicated. And let me hit on 3 items that I think are complicated with one grant, one loan. One is complexity. So the entire idea of one grant, one loan at the federal level is to address how complicated financial aid is. On the surface, I think that makes a lot of sense. But if we're talking about getting a simpler system, we have to recognize that one of the things that makes it so complex is multiple funding streams that go into higher education. And going to one grant, one loan doesn't do away with the largest source of financial aid, which is institutional aid, or state aid, or private scholarship providers. In short, it does simplify things for some students, particularly if what they receive is mostly Pell Grants. But for a lot of other students, they're still going to have to apply for financial aid. They're still going to have to go to the school and get an award notification that combines all the disparate types of financial aid from various sources and to come up with a net price. There's also the complexity factor for schools, because there is a cost associated in time, effort, money to administer complex programs. So recently, the Department of Education embarked on an effort to streamline regulations, some through negotiated rulemaking. We asked financial aid administrators across the country, what are the most burdensome parts of administering the Title IV programs? The things they came back with were, first, returning Title IV funds for students that don't complete. Second was subsidized loan usage limits, which have to do with subsidized loans. Third, consumer disclosure requirements, giving students so much information and not really with a lot of evidence showing that it's actually helping students make better decisions. And fourth, and fifth, and sixth, and seventh came a host of other regulations. When you look at one grant, one loan, that doesn't really do much for the top issue identified by schools, which is the complexity around figuring out how much financial aid is earned and how much has to be returned. So I think we just want to be very careful about portraying one grant, one loan as a panacea to address complexity. Number 2, loans. We have various loan programs, but for a student, less concerned about the number of loans they have and more concerned about the number of repayment options. And I think there's wide bipartisan, nonpartisan support to get that number down to 1 or 2 repayment options. So they might have 3 different loans or types of loans, but if they only have 1 or 2 repayment options for all those loans, they might not be aware of that complexity, and I think we could talk a lot more about loans. And then the third area I want to touch on is campus-based aid. Unlike Pell Grants and loans, campus-based aid is focused on the campus, and they have flexibility in trying to meet students' needs. So you're talking about supplemental grants, Perkins loans, work study. One grant, one loan, depending on who you speak to on which day of the week, may or may not include a component with campus-based aid. But the components of campus-based aid that are important and that I think we don't want to lose in this conversation are flexibility, When you look at the total number of students that are benefiting from campus-based aid, it pales in comparison to the number of students receiving Pell Grants. But for those million and a half students receiving supplemental grants, it makes a big difference. You're talking about FSEOG grants that could be anywhere on average from $700, but for some students exceed $1,000, and that makes a real impact. The second piece about campus-based aid is we wouldn't want one grant, one loan to simultaneously work against other policy pushes that are being made by both Republicans and Democrats. And the one I'll briefly hit on is accountability. And if we are interested in holding institutions accountable and in some way incentivizing certain behaviors, the easiest way, and I don't mean it will be easy, but the easiest way is probably through campus-based aid, which is focused on a campus. Other forms of portable aid like Pell and loans are much more complicated if you want to use financial aid to incentivize institutional behavior, because students can take those funds wherever they'd like. And to add another layer of complexity saying you can only use so much at this school or that school, I think is going in the opposite direction of what we're trying to accomplish. So not against one grant, one loan, but I think the things we want to be careful of here are flexibility, that we maintain some flexibility for schools to meet students' needs, so we don't work against current policy objectives in other areas like accountability, and I look forward to the conversation.
Awesome.
So first, I have to say that when 2010 is a long time ago, we've been talking about this for a long time. I was just looking around the room thinking, I know I've been thinking about this for longer than like almost anybody in this room because of how young everybody is. So 2010 is not a long time ago. Yes, I've been thinking about this for a long time. I agree that saying one grant, one loan probably sounds like it solves more problems than it does. I think we have to separate the grant issue from the loan issue because I think they're very different. If you look at federal grants, the reality is that right now, military grants, grants to veterans are about a third of federal grants. Nobody's talking about one grant in including that in the picture, right? So we're talking basically about campus-based aid, about the federal CEOG grants. If you just add Pell and CEOG, Pell is 97% of that. CEOG doesn't serve that many students, it's not that much money, and the real issue with it actually is it's not complicated. Most people aren't going to get it, so just forget about it. And nobody is really hurt by the fact that somebody else is getting a little bit of extra money, so I don't feel like it's compelling to take that money away from those students. I would rather add it to Pell, but what is compelling about it is the distribution of those funds. So if you're a student getting that, obviously you're really happy with it. But if you look at how those funds are distributed, the formula, everybody's been complaining about the formula forever. A disproportionate amount goes to students in private nonprofit colleges, and the share going to students in community colleges is very small, relative to their share of Pell Grants. It's not based on how much need people have. It's just not. So if we're going to have some extra money, we should put it into the Pell Grant program, and it's not about, and I understand when they take it away, they probably won't put it into the Pell Grant program, although we wouldn't even notice because it's such a small money in relative terms, it would almost be hard to measure. So I think it's really actually quite difficult to argue for maintaining that program, not because it is so because it's so complicated, but because it is distributed not in accord with the principles with which we distribute Pell Grants, which I think are better. So I feel like, I know you can show me a person who's benefiting from that money, but it's really a subsidy to their institution by and large. So the loan program, I think, is different because I totally agree that the loan repayment programs are more complex and it's more important to narrow them down. However, there are two issues, and I know this is not necessarily going to be popular in this room, but the subsidized and unsubsidized loan program. First of all, those subsidies are distributed not based on need, but based on, not based on income, but based on need. So my kids got subsidized Stafford loans because they went to, two kids at an expensive private college at the same time. That was not a good use of federal funds. Students barely know the difference, and most compelling to me is that the whole issue of need analysis for loans is just because of that loan subsidy, which is a small share of the loans now, And it's like we wouldn't even have to have people have a complicated need analysis for loans if we didn't have the loan subsidy. And we're talking there about need analysis that goes pretty far up the income distribution. So that's an argument for simplification, in addition to the fact that there's no evidence that that subsidy is really what is increasing educational opportunity. Again, dollars that I would like to see put into the Pell Grant program. But the other issue about simplifying the loan repayment does have to do with the Grad Plus program. Parent Plus is another issue, but we can't keep lending such huge amounts of money to graduate students and let them have the same income-driven repayment that they now have. I mean, Jason can talk about this well, but this is not what the intent of the income-driven repayment plans is, and so I think that actually, if we just did away with that and had Stafford loans and we had them for graduate students and undergraduate students, but if you wanted to borrow this infinite amount of money, you would have to look elsewhere as a graduate student, that would simplify a whole lot of the system.
So I'll just really quickly to touch on something that Sandy mentioned before I go into my whole spiel. What do I got? I got 5 minutes?
Yeah, 5 minutes.
Shrinking every second.
Just count against my 5 minutes because I'm just following up on something Sandy. All right. So she mentioned something about the subsidized Stafford loans that that this actually goes pretty high up the income scale, and the most recent data we have is from 2012. But it's something like 20% of the students who are getting subsidized Stafford loans are coming from families that are earning over $100,000 a year. So it's just that, and it's not, but not all families earning over $100,000 a year are getting subsidized Staffords. So it's just sort of this complicated system. So I will start though with a joke, because, and I'm going to borrow it from a former colleague of mine, Ben Miller, who's now at the Center for American Progress. And one day we were looking at loan programs, and we've got the Stafford loan program, and you can get your Stafford loan through the Ford Direct Loan program. There's also a Perkins loan program. And Ben goes, we could simplify this? Just stop naming loans after people. And that would just make it a lot simpler, right? Because then it's a federal loan, right? Instead of Perkins, Stafford, Ford. I mean, this is sort of a thing. I'm sure that Congress wouldn't take I don't think they really like that suggestion, since these are very important congressmen that these loan programs are named after. So I think Sandy's right on the grant piece, right? The sort of like one grant thing is not, it's basically already one grant, the Pell Grant program. But what I think of when I think of sort of one grant, the possibilities and the benefits of one grant as it applies to Pell is you are getting multiple grants, right? And so there's this issue of getting a grant per semester, getting a grant per year, per credit. So it's all this sort of trickling out the money through these complicated ways. And the way I think of a benefit around one grant is something that's a little more account-based. Like here's the amount that you have to use versus, I got a grant this semester, I get another grant next semester if I keep going. If I take more classes, I get a larger grant. So I think that's kind of the promise, and I'm not an expert exactly on how to do that on the Pell stuff. I focus more on loans, but I think that's where the real opportunity is on the idea of one loan with Pell. So that's how I would encourage you to think about it. On loans, there's lots of different loan programs, lots of different repayment plans, and and so I think, basically everybody agrees there should be fewer. I'm not sure, maybe Justin does. Yeah, Justin does, okay. So here's what I'm going to just sort of take a step back and give you it's kind of a cop-out and tell you how it got this way and not necessarily exactly what we should do about it. But it's sort of a good rule to keep in mind when you're looking at these loan programs is, how did they get this way? Because it tells you why they look that way, and there's not really any good reason for it. There's not a practical reason for all the different loans and different loan repayment plans. Mostly what it is Congress's bias to add, and when they add, they never subtract. Right? So new programs are added, and old ones are never taken away because that would create losers. So, and you see it all through the history of these loan programs. This is why we have campus-based aid and Pell Grants. It's why we have SEOG and Pell. It's Congress first created SEOG, right? Because their idea was, let's give money to the schools so they can give out the money. And then years later, Congress said, why are we giving the money to the schools? Well, because then they have to opt in, they have to match it, and not everybody's participating. So we should just do this. Federal government's really big now, we should just give the money to the students directly. And somebody said, well, okay, well, wouldn't that replace this other program at the schools? We're like, well, we'll just leave it though. Okay, who wants to take that fight on, right? Same thing with Perkins loans. Perkins loans got created in the 50s. And the money was given to the school, and the idea was the school would opt in, and the school would make the loan to the student. And then in the 60s, Congress says, well, how come not everybody's getting loans? Well, not every school wants to participate. Well, why don't we just make the loans? Or why don't we get banks to make the loans? And then we'll offer them to everybody. Well, what should we do about the Perkins program? Well, let's just leave it, right? And so now we had 2 loan programs operating side by side. And the Perkins program, one of the big benefits, I wrote a piece about this in Ed Next a few months ago. Perkins provided teacher loan forgiveness. And so the Stafford loan program that got created in the 60s didn't have teacher loan forgiveness, but Perkins did. So in the 90s, Congress said, well, we should add teacher loan forgiveness to Stafford loans. And so now both loans have teacher loan forgiveness. And then Congress said later on, let's add public service loan forgiveness to Stafford loans, to all federal loans. And they said, well, what should we do about this teacher loan forgiveness on the Stafford loans and the Perkins loans? Well, we'll just leave that. So we got 3, right? And so they just add and they never take away because the advocacy world will make them pay dearly if they ever try to get rid of any program when they're adding a new one. Advocates are perfectly happy to have more money even if it comes with more complexity, right? And they will oppose any reduction in benefits if it's to get simplicity. And so that's a dynamic you have, and I think those are sort of the politics that you're fighting, that these ideas and proposals around simplification are sort of up against. They're up against a really tough challenge.
Great. So we're going to launch into a question and answer, and I actually want to piggyback off something that you just said. So you mentioned that Congress would oppose reductions in benefits if it meant having to create losers. But it is kind of difficult to argue against simplification. You know, we all know that this is a very complicated process. What are some of the things that you would have to give away in order to achieve the simplification? I guess we can.
Well, I mean, it seems pretty straightforward that if you, for example, got rid of the campus-based programs, then those students who now get funding from those campus-based programs would lose out. Even if you put all of that money into Pell, that money is going to be distributed differently, right? So at which I think most people think, I mean, if you had to start now, no one would suggest, let's develop a program where we're really generous to a few people going to some selective private colleges, but if you're at a community college, then let's lock you out. I mean, you just wouldn't design it that way. But that doesn't mean, I mean, you can still see the people, the individuals who are getting that money, and it's really helping them. And so nobody wants to take that money away from them. And that's true with the subsidized loans. So any simplification, I mean, to make everybody whole, to give everybody what the people who are now getting SEAG are getting, that would be fabulously expensive. We can't do that. And that just means there will be some, either individual students or schools, because I mean the reality is that if you go to Harvard and you don't have a SEAG grant, Harvard will make you whole. So it would be the people who go to institutions that cannot afford to replace that, they would lose out.
So there's no way that any of you can kind of conceive to kind of simplify without hanging some students out to dry?
Let me just say, I don't think hanging them out to dry is the right, but go ahead.
So I want to say yes. I think you could get to one grant, one loan, but you'd have to do it in a comprehensive way, and that's not normally how we've done things. So for example, the Perkins loan program right now, authorization to make new loans ended at the end of September. This is a piecemeal approach, and while schools have, and not students, but schools have known it's coming, the fact that now some students, and maybe it's a small number, it's less than around 1 million students that are getting a Perkins loan every year, they now have a gap. And so if you address this in a comprehensive way and said we're going to have one loan, but that loan, we're going to play with the loan limits a little bit so that students aren't gapped, I think you can move in a direction of simplification. Short of that, just the same way they piecemeal ad programs, to try to do it that way, it just doesn't work because students are left in the lurch. So it's got to be addressed in a comprehensive way.
So there's an interesting case study, though, around getting rid of grant programs actually happened in, was it 2010, 2011? The academic competitiveness grants and the SMART grants. These were, for those of you that don't remember them, Congress added them as a supplement to the Pell Grant program, and added in the SMART grant, it was a curriculum requirement, and in the academic competitiveness grant, there was a GPA.
It's a merit component.
Yeah, it's a GPA requirement, and then also a requirement that you have taken some curriculum at the high school level as well, where states were aligned, et cetera. But these were around for a few years, and they quietly expired. And nobody, right, like, you didn't hear peep from anybody, which I thought was really interesting.
Yeah.
And the grants were substantial, and they went to low-income students. And I think, maybe I'll give Justin a hard time here a little bit about why I think that they went away, is NASFAA hated them. They hated them because they were a gigantic paperwork mess where the financial aid administrator has to figure out, are you eligible, and they have to track down this information, and you have to be in the right course, and I mean, they were the opposite of simplification. They had gone in the wrong, and what we did though is we got simplification by letting them expire, and I just think it's worth everyone thinking about, like, how did that happen? How did we all let that happen?
So yes, and let me add something to that. The other reason that we were largely unopposed to those expiring was we had delved into the territory of taking our flagship federal program. To qualify for these grants, you had to be Pell eligible. It was an add-on with a merit component. And this really kicked against what we focus on, which is when you're looking at Pell, it's the primacy of need-based grants. And when we started mixing and matching federal grants with merit, we had a philosophical opposition, besides the fact that it was ridiculously complex. Yes.
And they were short-lived. I mean, the reality is that the campus-based programs have just been around forever, and so I think it's harder to get rid of.
Can I build off of something here that you just said, Sandy, earlier about the allocation formula? I don't dispute that the allocation formula is broken and is not being distributed in an equitable way that's following the need of the students in the aggregate at different schools. But I guess I just wonder if there's a way, and maybe this goes back to the comprehensive nature of getting to one grant, one loan, if there's a way to address that without just wiping out campus-based or the concept of campus-based aid entirely. So I don't know, politics is one, and what happens on Capitol Hill is one consideration. Philosophy is another, but if the philosophy is that the allocation formula, how money is distributed to schools and those programs is broken, isn't there a way to just address that without necessarily just wiping out all campus-based aid?
So I actually wanted to ask kind of a similar question. If you've been listening, you can tell that it is a very complex and complicated system as it currently stands. One grant, one loan is supposed to simplify that. But if you're thinking about campus-based aid and you're thinking about all of these things that aren't federal programs, what does an actual simplified system look like to you?
And so it seems like you're kind of getting at this issue of, and where we say, well, if the federal government does its part and we can go to one loan, Justin, you alluded to this earlier, like there's still a financial aid package,
yeah.
Right? That's like multiple lines of stuff, and would that all fit together to cover some portion or all of your cost of attendance? And I think that, that's, there's still going to be federal tax benefits probably too, right? So, I don't think that that's, that may be too much to sort of, hope for and go after. I think the federal government can do its part, and there is some low-hanging fruit. I think there's bigger ideas that they could pursue as well. But I think that's just there's lots of sources of financial aid, and part of that, is a function of we have a system where we try to make sure people who can't pay get aid and people who can don't.
I wouldn't say we try really hard to make sure that people who can pay don't get aid, but
okay, all right.
But I think the reality is that we have a diverse system with lots of different institutions that have lots of different prices. The federal government's job is really to assure that people have access to a quality higher education. But that doesn't mean that it's necessary. I'm all for choice. I went to private colleges. Expensive private colleges. My kids did. I love them. But that's not the federal government's job to make sure that the people who choose those institutions can pay for them. They're always going to have a more complicated financial aid package if they're going to a more expensive institution. I don't think there's any way around that. It doesn't really worry me. And I think, though, that in terms of institutions, and I just wanted to hark back to what Justin said about accountability, because I think it would be a great idea for the federal government, in addition to having Pell Grants, to have grants to institutions, to allocate some funds directly to institutions, to encourage institutions to do a better job of educating low and moderate income students. But I don't think that you can do that with a system that is without changing the distribution formula, because a lot of institutions don't get enough of this aid to make this work. You'd have to make sure that these went to any institution that served these purposes. And it wouldn't necessarily mean that students got less money. It would become institutional money. And if you just thought that the money from the institution was institutional aid, it wouldn't be like a separate piece. Institutions could use it for financial aid or for academic support systems or for whatever. So they can fund institutions, give institutions incentives, hold them accountable. But I think doing it through the amount of aid that individual students get is pretty complicated.
I would agree.
So for students, if we're wanting to increase access and have the government simplify things to increase access for students, one issue with a complicated system is that students end up not learning what the full value of their aid package is until far too late. I don't know if you saw my colleague Eric Hoover's story yesterday that essentially followed two low-income students, to college. And so would a simplified one grant, one loan system kind of help in getting students a full look at their financial aid package sooner?
If I'm a student and I'm attending an institute, and I'm attending a school in a state that doesn't have much state financial aid, at a school that doesn't have any institutional financial aid, then I can probably get a very accurate picture of how much my net price, that's total cost minus grants, is going to be just by getting a Pell Grant estimate. And that might cover a significant portion of students. But for all the other students that are going to states with financial aid programs that attract private scholarships or go to school with institutional financial aid, it's just not going to be enough. And they're always going to have to go through this process. You asked earlier, maybe you didn't ask this specifically, but the simplest way to get students information would be to have a single payer in higher education. That would simultaneously destroy higher education as we know it in this country. It would fundamentally change everything. So I just don't think that's philosophically a good idea or realistic. So we are always going to have multiple streams. That's how we fund higher education in this country. And students are going to have, because of that, a byproduct, some complication if they're utilizing multiple streams to help pay for college.
And so, Sandy, you mentioned that for loan programs, subsidized loans, unsubsidized loans, that students often don't know the difference. Is that a college counselor problem, or is that the federal government needs to do a better job of explaining the loan programs, and would moving to a single loan program help in kind of giving students a better awareness?
Well, when you realize how many students don't know that they have a loan and not a grant, then you realize, that's really important that they should understand that. It's much less important that they understand exactly, they should understand it's a federal loan and not a private loan. That's terrifically important. If they don't understand whether it's subsidized or not, if they don't know the interest rate, obviously it'd be better if they knew all that stuff, but I think there's so much they need to understand before you get to that point that just having a single loan program really wouldn't solve the fundamental problems, I think, of lack of understanding of what they're getting into when they borrow this money.
Yeah, I think that the subsidized Stafford versus regular Stafford loans is a great example of just the complexity, and again, around this history. So we used to only have subsidized Stafford loans. They weren't called subsidized Stafford loans. I forget exactly what they were called, some different name. And then in the 90s, Congress said, but they had a means test. And in the 90s, Congress said, well, let's let everybody get the loans, right? So, regardless of their income. And they said, okay, but that we can't let everybody get these loans with where the interest is, they don't have to pay interest while they're in school, because that'd be expensive. So we'll open it up to everybody, but then we'll charge them interest. And then we won't get rid of the old loan program, right? So you have two. But the crazy part, the really crazy part about this, and this is the part that really makes me frustrated that Congress hasn't yet fixed this, right? And that there isn't a big advocacy push to try to fix this problem. They maintain both loan programs, but one loan program has a higher limit than the other. So as a student, you borrow at first the subsidized loan, and then you top off with the unsubsidized portion to get up to the limit in the same semester. You are getting two different federal loans to the same student, same semester at the same school. And then one has this different set of terms, and then this, which is the interest, you don't have to pay interest while you're in school, it doesn't accrue while you're in school. And the other, you don't have to pay it, but it does accrue. And, this is just, so now you've got students with literally two different loans for the exact same semester from the federal government. And if they have a Perkins loan, they have a third loan. And then if they have a Parent Plus loan, they have a fourth loan in one semester. This is, what I don't understand is why there aren't, why the advocacy community isn't up in arms saying, this is madness. Why are we doing this to students?
Since you looked over in my direction, I'll attempt to answer that.
Well, just because I just like this side of the room feels getting a little warmer.
Thank you. So I agree with the concept that students aren't making any real decision about enrollment based on whether they have a sub or unsub loan. Most students have both if they're borrowing. And there is a mathematical financial benefit. We can't argue with that. That's just math. If you have a subsidized loan, you're going to be better off financially. The extent to which will be determined by how long you have the loans and how long they're subsidized, and et cetera, et cetera. But it doesn't really drive student behavior. I think this gets to two issues, though, going back to some of the fundamentals of financial aid. One concept which is almost quaint now, which is financial aid was originally conceived on the idea that grants would provide access to higher education and loans would provide you a choice. That is, I would have basic access to post-secondary ed if I couldn't afford it with grants. And if I wanted to go to a more expensive student or school, as Sandy talked about earlier, then I would take on more loans. That was a decision. Loans have become an access vehicle, which there are students today that cannot get a basic post-secondary education without loans. They are now part of the access equation, which changes, I think, how we look at them. That's not to say that we should have all subsidized loans or have two different loan programs. I think it just gets to the philosophy behind loans. If we've moved away from grants, access, loans, choice, it changes the paradigm. The second thing, philosophically, that I look at with loans is, if we do away with the subsidies, this gets into some of the politics and numbers, that will garnish for taxpayers a pretty significant savings. And somebody said earlier here that the question is, if we go to one grant, one loan, it generates savings for taxpayers. Does that money go back into higher education, or does it just go back to Treasury or deficit reduction? And we can talk about what's going on in politics today and how realistic funds going back to Treasury versus students are. But if one grant, one loan starts becoming cuts masquerading as simplification, I think you'll have galvanized opposition to it. So this gets back to the comprehensive nature of trying to tackle that. I think you can get to a simplified system, but I don't think you can do it if it's masquerading as a cut. And I do think you'll galvanize a lot of advocates against it if those funds just vaporize. They don't go back to students.
I think that's true, but if you look at what's happened over time, we are gradually letting the subsidized loan program wither, basically, right? Because we increased the loan limits for unsub, and therefore subsidized loans are a decreasing percentage of the amount that people are borrowing, and there are very few students who can rely only on that program, and so it will become less and less important, and then maybe, a generation from now, people will say, what's that little program? It doesn't matter. The other thing is, I think its relationship to income-driven repayment. So if we can improve the income-driven repayment system and make it simpler and make it automatic, then that's a good time to think about the loan subsidies, because the fact is that your monthly loan payments in income-driven repayment don't depend on what your interest rate was or whether you had that loan subsidy or not. The only impact will be on how long it takes you to repay your loan and whether you end up getting some of it forgiven. And that's obviously a financial issue. It's not that there's no cost to that, it's no loss, but it's a very different question from, oh my gosh, I'm going to graduate from college and now I won't be able to afford my loan payments because they put that accrued interest on. The other thing I would point out is that, you know, the longer you're in college, the longer the government is paying the interest on your loans. So there's another distributional issue there, not just who's borrowing the subsidized loans, but if you're in school for 4 years or 5 years, you're getting that loan subsidy for that long. And if you're in school for a short period of time, you're not.
And if you go to graduate school, you get it, right? So another excellent, great bonus for going to graduate school, federal government.
So, Jason, I know you have a lot of thoughts about the current proposal for the simplification of income-based and income-driven repayment. Can you talk about how that fits into the larger, loan simplification system?
Yeah, well, I mean, I'll be the first to admit that, I could also be accused of trying to make the loan program income-based repayment more complicated because I've argued that and it's not my fault, and I've argued that that graduate students shouldn't qualify for the same loan forgiveness terms that undergraduates qualify for, because I think that you don't want to give people who can borrow. What you don't want to do in IBR is give people the exact same repayment terms regardless of the amount they borrow. Right? That's a fundamental problem with IBRs. What we've done is we've said you can make payments based at 10% of your income, and you get loan forgiveness after 20 years. If you borrow 10 grand, and you get the same terms if you borrow 200 grand. And that's a problem, right? So nobody thought about that at the time, but it is a problem. Interestingly enough, the first version of IBR, which Sandy actually helped create in 2007, which was 15% of discretionary income and 25-year loan forgiveness, I thought was simple and worked just fine. And it had only been enrolling students for about a year, not even a year. And the Obama administration said, we got to make it 10% of income and 20-year forgiveness. Where do those numbers come from? Nobody knows. Nice round 5 on each one, right? And so this is what has created these problems around income-based repayment, and I think it's prompted many to say, well, yeah, maybe we need to do something about that. Unfortunately, because even the Trump administration doesn't want to go back to the way we used to do IBR, which we tried for 1 year and seemed to be maybe working fine. Going back to that one simple model where everybody has those terms, and the reason why the grad students is not so much a problem there is that 25-year loan forgiveness and 15% of discretionary income, they're going to repay their loans, right? Is that nobody wants to roll back benefits that the Obama administration added to the program for undergrads. Right? And so that's, again, this is why we have this sort of complex system. But I think that, ideally, if we wanted to go really big around income-based repayment, and the one loan idea is you scrap the whole thing, you give everybody a $50,000 account that they can draw down at any rate they choose, and that's their total amount. And then for every $10,000 they draw down on that account, they're signing up to pay back 1% of their income for 25 years as a surcharge on their federal income taxes. So that's just one, and then we don't have to debate interest rates anymore either. There's no interest rates.
I agree with most of this, but in thinking about how we can make the amount you repay associated with the amount that you borrow, because of course, to have the incentive to just borrow extra money because you'll never have to pay it back is ridiculous. But that not knowing what your monthly payments will be relative to your income, I think, is not just a complication, but also sort of borders on, is this working as income-driven repayment? Because when does it get unaffordable? But you could say the more you borrow, the longer you will have to repay before your debt is forgiven. And that means that you could still predict your payments, they'd still be affordable. But, if you borrowed $300,000, which I don't actually think the federal government should be in the business of lending people $300,000, but if you did, you'd be paying off for, 50 years or something. So that way, people would pay it off, and I like that approach better.
So, Justin, you mentioned that you don't want simplification to get in the way of other policy pushes, or congressmen don't want simplification to get in the way of other policy pushes. Can you kind of flesh that out a little bit more?
Yeah. So one of the big themes that have come out in the last couple of years is this idea of accountability. How do we hold schools accountable? Do you use a carrot or do you use a stick? So carrot is more, can we hold out financial incentives that schools can compete for or effectuate certain changes on their campus to either retain students, enroll certain students, and they would get some sort of incentive to do that. I think that's much more preferable than a stick, but the most likely way you could do that is to rethink campus-based aid, because that is aid that's distributed to a school, which then there's certain parameters about how they can award that out to needy students. So when you do away with that concept of campus-based aid, then you're left with the portable aid programs. I think it's already complicated to try to come up with incentives that don't inadvertently skew the system as we have it today. But to add the complexity of then trying to tack it onto a Pell Grant program or a loan program, it just starts to make it unattainable. So if people are truly interested in holding out carrots to effectuate certain institutional behaviors, I think the place to do it is in rethinking campus-based aid. That makes the most sense to me.
I mean, I think that it's sort of frustrating because I wonder, like, if there's ever a situation where simplification is more important than getting more money. Right? I mean that's like, I feel like could there ever be that kind of situation? I mean, it seems like to me that, or even simplification is so important that it might even be, if there's a little bit of money that leaks out of the system, out of some deal, but we get a lot of simplification because of it, is that worth it? Right? I feel like that's just not, everyone categorically says absolutely not. And I think that's something that, folks should challenge people on, which is maybe it is worth it, right? Right? If it was big.
Yeah. I mean, and I think clearly the idea that the grant system would be simpler if we didn't have this small campus-based federal grant system. So that's worth it. That really isn't going to make any difference. But the reality is, like we all know, that FAFSA simplification. There are all these people who aren't getting the aid that's out there because of the fact that they have this complicated application process. So it surely would be better for people to be able to know about and access the aid that they get, even if they got less of it. And in fact, in the Rethinking Student Aid proposals that came out in 2008, even before 2010, we proposed exactly what you're saying, which was take that campus-based money and use it to create dollars for institutions as incentives. But I think that, I lost the other thought. So anyway, I think that there are cases where it really does make a difference. I know that in my Pell Grant proposals, we have suggested things like, even if you have to take a little bit of money out of the Pell Grant program now, we need to give students better advice about how to use that money, where they should go to college, what they should study, and so on. And they would be better off if you took, $200 of their Pell Grant away and helped them make a decision where they wouldn't get totally ripped off and lose all of their investment. So I would rather have extra money for it, but I think that there are definitely ways where students need much more than money.
So we have just a couple more minutes before we break into the audience Q&A, but I did want to ask one last question, and this is related to grad students, because it seems like the suggestion that you made, Jason, would kind of penalize grad students for kind of pursuing extra education, it would seem, if they were, if they had to pay more or pay longer to get a graduate education. Do you see that as a potential issue?
No. No, I think that graduate education, out of all the types of higher education, really should be able to justify itself and its prices and the programs based on the returns that students get from getting the degree. Much more so than undergraduate education. I completely understand if there are sort of market failures in undergrad, if we're worried about equity. I think that all of that's important, and we need to solve that. And when there's much more to do in that regard in undergrad, which is why it's so troubling to me that the federal government is providing large subsidies to graduate students, right? So if you want to go to Georgetown, law, and you can borrow as much as it costs. You can borrow $75,000 a year, basically, no questions asked, Georgetown law. Now, if you've gotten into Georgetown law, welcome to the elite. You're one of the most elite people in the country. Good job. And tell you what, you can get loan forgiveness. And if you work in a nonprofit, you stand to have, we modeled this out once, that people going to Georgetown law stand to have about $150,000 forgiven. Now, if you are poor and you get into Georgetown undergrad, the most amount of money the federal government is going to give you is about $30,000, right? $25,000. That just doesn't, it's not fair. And I think that people who graduate from Georgetown law are going to do just fine.
I would say that the one thing that is not fair is what we have now, where if you borrow any money at all for graduate school, then suddenly, even for paying back your undergraduate loans, you have to wait longer to get them forgiven. And that's not fair.
Yeah, I think that's a problem too. And I'm not sure that somehow came out of the that came out of one of the negotiated rulemakings, and then the Trump administration has picked this up too. And I don't know which sort of groups are in favor of this, but I've always said it should be an amount, right? An amount that triggers it.
Just speaking up for grad schools for just a minute, I think people have natural aptitude when they think of grad school to think of doctors and Georgetown law students and business students, and I think there are a slew of grad programs where we have a public interest in making sure they are subsidized and funded, particularly around teacher education, not doctors, but nurses and practitioners and social work. And I agree that the current system is constructed needs to be changed. And NASFAA has supported the idea of limiting the amount of forgiveness that can be provided and putting in some caps to make sure that we avoid some of the moral hazards or appearance of moral hazards that exist. But the concept, and I can even accept that undergrad might be a priority, but the differential going forward as we look into the future will be grad school education. And I think there's a public interest in subsidy there.
And on the grad school side, I don't think it's a coincidence, right, that we see more and more schools rolling out graduate programs and charging very high prices. And this is the one place where you can borrow unlimited federal money, and there's basically zero accountability from the federal government, right? So no scorecard data, right? And so this is not the kind of transparency, and I think that's why this is going to, I think Justin is right. I mean, I think schools are going to be launching these programs like crazy because it's tons of money, and they don't need to worry about the accountability stuff.
So we will start the audience Q&A portion. I guess if you have questions, yes. Molly is coming around with the microphone. Okay.
So on the grad student public interest route, when you're talking about subsidizing certain professions, I think law students fall into that category. So let's say you have poor kids who want to be government attorneys and they want to go work for DOJ. You look at the profile of attorneys who are in the DOJ honors program, and they're all coming from the top 14 schools, receiving educations that cost enormous sums of money. I just find it hard to imagine a system, and I agree there's certainly moral hazard problems with allowing people to borrow unlimited loans and then saying they're all going to be forgiven after 10 years. It's a running joke amongst law students that you just take out as much loans as you want because it's free government money and you'll never have to pay it back. But how do you get a system where you have poor kids who want to go to a top school because those top schools are so important to get you really good jobs that aren't necessarily the most high-paying jobs? And once you get them in those schools, if you don't have ways for them to just get all their loans wiped out, how do you prevent them all from just going into private firms who offer triple what the government's offering? And I realize there's a lot of issues there, and you've addressed them, but I just feel like there is that lingering issue of getting people who aren't like sons and daughters of millionaires into the DOJ without having such a program.
Well, it's really easy. Income-based repayment. You do it with income-based repayment. That's what we do for everybody working in a low-paying job. We offer them income-based repayment. That's what you offer them. I mean,
But
right?
we are proposing that income-based repayment not extend to, like, you would have to, first of all, many of these law schools have need-based aid programs where they do ask you about your parents, right? But if we, as we propose, say, loan forgiveness and income-driven repayment would have to be limited. You can't have, $400,000 of loans in that program. Then we are basically saying if you're going to go to law school, you may have to borrow some money on the private market, and that's okay. So you may need to do something more, but to do it for everybody in advance, I mean, if you think about the difference between taking one of those jobs and taking a job in a big law firm, like, that's a lot more than just repaying your loans. We're talking about millions of dollars over your lifetime, right? So you don't want to subsidize everybody who might do that. You want to do it through income-based repayment or through subsidies. I mean, we could pay them more would be the really best way to do it, right? But it needs to be targeted, I mean, it's like these loans, like should employers be paying back people's student loans? Employers should pay people more. You shouldn't have to have borrowed to get compensated in a reasonable way. We should compensate everybody in a reasonable way. Anyway, I mean, it is an issue, but you got to make sure it's very expensive to do it in a broad-based way.
And I think, just to flesh out my point just a little bit more, right? So income-based repayment would allow someone to take that job because they can make a payment on their loan that's affordable. It doesn't bear any relation to the amount of debt that they have. They make a monthly payment that reflects their income. And so, and this is a way of sort of treating people with the same incomes but in different jobs in the same way, right? You want to provide the same amount of benefit to someone earning $30,000 in this job versus that job, right? The difference is that when income-based repayment got created, someone somewhere argued that we should have an additional bonus loan forgiveness for anybody not working at a for-profit entity, and the loan forgiveness would occur 10 years earlier. But really all the arguments about being able to afford your high loan balance and take the job you want to take, IBR is doing all of the heavy lifting there, not public service loan forgiveness.
So I think conceptually, we might be saying the same thing, but I think we're drawing our lines maybe differently because I agree with what you're saying about income-based repayment being the protection. But I still think there's a role for public service loan forgiveness. I don't know that public service loan forgiveness should be an open-ended, we will forgive as much as you've borrowed. But if students go in up front, and if they're a top student, we want those top law students working in the public interest. I think that is something worth subsidizing through income-based repayment, but I'm okay with public service loan forgiveness as long as they know up front, public service loan forgiveness will forgive up to this amount. And we're just transparent about that up front. So we might be drawing our lines a little differently here, but conceptually, I understand that we don't want an open-ended, and speaking of simplicity, complicated way to subsidize higher education, which is all on the back end. That doesn't do much for simplification.
We had a question back here.
Thanks, actually. So I want to actually address this Grad Plus because there's a narrative out there, and you guys have done it today, quite frankly, of blending PSLF and IDR kind of Grad Plus as all one big thing. And as if you work in public service and, you open up a piece of candy and suddenly magically all of your loans are forgiven. So let's be clear about the program. It's 10 years of your life that you're dedicating at a minimum to public service. It's not you go borrow $750,000 and then tomorrow it's all forgiven. So we should be very clear about the programmatic requirements. You have to be in a correct income payment plan, make 120 payments. They don't have to be consecutive, so this could be spread out over several years. Another thing, Jason, I'm just really interested to hear you. You said that IDR would be a substitute to carry the heavy burdens. But if you do have a high loan balance and you are in an income-driven repayment plan, it's actually conceivable if you borrowed $400,000, that would take you upwards of 50, 60 years to actually repay because you never actually get down to the interest, especially if you're making limited sums without some type of forgiveness at some point in life. And I guess the question is that all of the analysis from you three today have been about that's a bad thing to give forgiveness, but nobody has addressed why that's a bad thing, first off. And so I'd like your answer to why you're saying that forgiveness under Grad Plus or PSLF is a bad thing per se, because you said that the federal government shouldn't be funding this, so I'm interested to know why shouldn't it, and if it shouldn't, what should it be funding elsewhere? But then ultimately, how do you address the question of, if you think that IDR is the way that you're going to take care of it, what happens when you're paying loans for basically about 50 years, depending on the loan balance and things like that?
Yeah, I've argued you should have loan forgiveness at 20, 25 years. right? So everybody gets the same terms, 15% of income, discretionary income, and 25-year loan forgiveness. So, right. No, I would include loan forgiveness with it. I actually think that in an income-based repayment system, you have to have some loan forgiveness at some point. And I'm pro having an income-based repayment system, and I'm pro having a point at which you're done. I think that the way we've designed it is the share of the income is too low, and the point at which you are done is too soon, relative to the amount of money that people would borrow for a typical undergrad plus master's degree. And I think those things they're just really out of balance. And to your point of like, why is that bad? Well, because one, it's unfair. I mean, I think there's just an equity problem, right? Where if I borrowed a whole bunch of money to do this and you didn't, you used your own money, I win, right? And the guy who borrows more gets a bigger benefit. You don't want a system where the more you borrow, the bigger your subsidy. And it's also a problem where it distorts prices and it distorts decisions, right? So, I mean, I think those are really the issues with it. But I'm okay with a system that's sort of, balanced.
Can I just add, the confluence of problems, I'm going to channel my inner Jason Delisle for a second. The confluence of problems, though, is the unlimited borrowing in a federal loan program coupled with unlimited forgiveness. Because if you started drawing lines anywhere in those equations, like you could say that we will allow, like we do with undergraduate, graduate borrowing up to this point, and we've had some grad schools looking at, even if it's still within the consumer protections of a federal loan, some sort of stricter underwriting for additional borrowing. That gets into another layer of complexity, but my point is, your issue, as I understand it, is the unlimited borrowing, unlimited forgiveness.
Well, not really. I mean, it's not so much the unlimited borrowing. It's just that because if you got rid of Grad Plus, I actually think you still have a problem, especially under PSLF. You don't under the rest of the program, under the 25-year loan forgiveness, because you don't even need to be accessing Grad Plus loans to get into debt levels that are really out of whack with the repayment terms that you're being offered.
So I think that's where we would differ. So I see if you have some constraints on federal borrowing, that builds in sort of this protection against unlimited forgiveness. And you could even then build in how much you would forgive in the future. And you're sort of tackling the major issue or the major critique that I see of all this, which is the uneven subsidy, but then also the moral hazard of graduate school education and tuition.
So we've talked a lot about the sort of nitty-gritty issues with theoretically moving towards one grant, one loan, but is this even on the horizon? I guess, can you guys just talk a little bit more about the political prospects and whether we would actually be moving in the direction of this massive overhaul of the financial aid system?
So I think we are moving. I mean, certainly the folks that have the most conceivable influence on this, the chairwoman of the House Education Committee has put out a paper basically saying that they want to move in a one grant, one loan direction. Senator Alexander and Senator Bennett put together the FAST Act, which moves towards a one grant, one loan solution. So this is definitely where things are moving. Senator Alexander's major concern with extending the Perkins loan program was based on the concept that they want to streamline the number of loans. How we actually get there is a little more difficult to see. So you have House and Senate budget resolutions that are moving forward that may or may not contain reconciliation instructions that then may or may not ensure that this happens in a piecemeal approach. And then you have student aid funds that are going to deficit reduction, and it gets very messy very quickly. In an ideal world, you would tackle this all in a reauthorization so that you could make adjustments to simplify, but also then maintain consumer protections, that you could provide flexibility for schools, and that you're not working against other policies that you are also proposing, like accountability. So I think it's awfully messy. Ask me after the Senate passes their budget resolution, then we'll have a clearer picture.
Hi, I think of you guys as sort of amazing data people too, and I wonder how much data and information might inform some of this discussion a little bit, because I do know we've been throwing out a lot of ideas, theoretical ideas, and I think we do have some data that might help us figure out the impact on certain groups and others. Like, you know, we talked about the subsidy. The loan subsidy doesn't exist for graduate students anymore, so they're not eligible for that subsidized loan. And we know that our biggest defaulters are students who enter programs and drop out quickly. We know the people who are most likely to pay back our loans are graduate students. We know, whether we know with data or anecdotally, we have some examples, but I think for the most part, students are not willy-nilly borrowing. I use the example of my family. If I give my 15-year-old son $20, there's going to be money spent in a way that I don't like, guaranteed, right? So that happens in federal programs too. So how much can data and what we know about borrowers and what we know about repayment and other things help us more concretely determine impacts of these different programs and what we know?
I don't think all that much, actually. I don't think this is we just don't have enough information to decide. I think this is fundamentally this is a trade-off issue, right? And you know, Sandy and I have both run tons of data on who gets subsidized Stafford loans and who doesn't, and what schools are they attending, and what are the default rates, and all this sort of information. But that isn't really what's missing. It's not as if, you know, the next study in that regard is going to come out and Congress is going to wake up tomorrow and the advocacy world is going to wake up tomorrow and say, yeah, maybe it is time to get rid of subsidized Stafford loans. Right? It's mostly a political. I think it's mostly a political kind of advocacy type issue, and I don't think it's a lot of like we're missing. You know, some key piece of information. I did a big analysis of the Trump student loan proposals, showing that if you know, and these were, the Trump proposal widely panned, right? I know maybe people can't even say what's in it, right? It's a huge boon to undergraduates. A big increase in benefits to undergraduates, even though there's a loss of subsidized Stafford loans, but that's what everybody talked about. But there's an increase in the loan forgiveness benefit under IBR. So undergraduates win big as long as they don't earn a high income. And so here's, it took months to do the analysis and sort out all the winners and losers in this thing. And you put it out there and, people are sort of like, whatever. Right? So, it's like, because it's mainly an issue around, politics and trade-offs and what people want to do. I think it's an information problem. One right here.
Good morning. Justin, you mentioned earlier about loan limits for undergraduates, in particular the interplay between if students not having access to Perkins. And that started making me think in a bigger picture, well, one, what do we do about loan limits, but larger, even if the three of you could agree on what a one grant, one loan program would look like, it's still very possible, given the current size of the Pell Grant and the current size of the Stafford loan, that a four-year public education would be unaffordable to low-income students in many states. So how do we keep that as part of the conversation? Looking at some of those other complicated funding streams and considering how, great, we have this new one grant, one loan program. What does that actually mean for students when they get their financial aid package, and how do we communicate that to them? There's a lot of questions.
I think you're asking about the adequacy of the available financial aid, and probably most people here would rather have us give more generous Pell Grants than say, if you have to choose between the loan subsidy and the Pell Grant, you want it to be in Pell Grants. That's a much more effective way of subsidizing students. So, and politically, obviously getting any savings to go into this particular program is difficult, but there is some history of getting some of the money that we saved from changing the loan program to go into grant programs. And it would seem to me that, really pushing on that is the most important, because getting that package to add up for a public four-year college student, we don't really want to do it by saying, oh, we'll just forgive more of your debt in 20 years. We really want to do it by saying we can talk about how you can pay now. And there obviously are other conversations about what the federal government can do to influence state funding and the availability of either state need-based grant aid or state subsidies to public institutions.
I want to make a distinction between complexity and simplification. I think any school that you would talk to or any financial aid office is willing to jump through a lot of complex hoops to put together a package that will work for students. So aid offices will pull all sorts of disparate funding. They will adhere to certain requirements that are attached to certain programs to put together a package that will meet students' needs. So I'm less concerned about complexity in that way. For a student, it's like us driving a Tesla. A lot of things happening under the hood that we have no idea about. Very complicated machine, easy to use. I'm mostly worried about students and how easy it is for them. So if one grant, one loan makes it easier for students, but within that construct, there is flexibility in loan limits based on certain institutional criteria. That's a complexity for the school to worry about, not a student. So I'm okay with some complexity. I think what drives aid offices mad is complexity around things that are penny wise and pound foolish, like tracing down the very last date a student attended who withdrew without notifying an aid office so that we can return an extra $26 to the federal government. That's madness. But complexity in trying to put together an aid package to fill need is something schools will do.
Yeah, and there's, and to Justin's point here on the, I hear from policymakers, particularly right of center folks, who, on the one hand, they like freedom, they like choice, they like markets. And when it comes to student aid programs, they like rules and restrictions. And it actually pains me to hear free market conservatives say, and we, the government, just need to get the incentives right? That's a very terrifying thought to me, is sort of Congress ever being able to get the incentives right. And so that's one temptation in these programs, and it's not so much around one grant, like you'd still have all these rules and restrictions even if you just had one grant, but there's a big fight to be fought in terms of the rules and restrictions. If you look at the student aid handbook, I have a piece coming out tomorrow with Brookings on Pell Grants, and I had to go and relearn all the rules around dispersing Pell Grants, and
an entire volume on it.
It's a whole volume on it, right? And this is all to make sure we give the right people the right amount of money and not a penny more, right? And that I think there's a lot to be gained on loosening up on some of these rules and restrictions. So here's the simplicity part. The folks on the right, I think, need to be willing to give up that money's going to be wasted to get the simplicity. But I think it's worth it.
There any more questions?
Hey, Jason.
Hi, Rachel. You waited right to the end.
Yeah, I know. Well, because we did a lot about Grad Plus, and I didn't want to derail with Parent Plus. But a lot of the one loan, one grant proposals that I've seen, I guess it's been a while, but usually it's one loan for undergrads, one loan for graduate students, and one loan for parents, which is kind of hilarious because it's 3 loans, 1 grant. But I think I've written a lot about Parent Plus loans, and I was wondering if any of you could weigh in about, because we kind of pushed them to the side. I think, Sandy, when you were talking, you said, in Parent Plus loans, that's usually what happens. It's kind of in Parent Plus loans, throw up your hands. If we did move to one loan, one grant, what would you, in your opinions, like to see happen with the Parent Plus loan program?
Yeah, I think that the Parent Plus program needs to be gotten under control to a certain extent. Now, you could argue that the private market would handle lending to parents because, in fact, one problem with the Plus program is we're actually lending to people who will never be able to pay these loans back and sort of ruining their lives, and I don't think that's a good idea. Now, I'm not sure that we should abandon the program, but certainly we should not be lending infinite amounts of money, as we basically now are. And look at the tension that arose when we tried to tighten up a little bit on the restrictions on borrowing. And the idea that it's doing people a favor that they can borrow amounts of money that are going to literally make them lose their homes and they're going to be in debt forever so that their kid can go to a more expensive college. That is not a solution. We obviously need to do more to help low-income families finance education, but having the parents borrow that money, I mean, it's right that when parents can't get a PLUS loan, you can borrow more as an undergraduate student. I mean, we could talk about how those loan limits should actually be set. But asking those parents to borrow that money, I think we have to get away from thinking, oh, getting everybody at the first moment to give their kids their dream education is the answer to people's problems. It's not. So absolutely, we need to restrict the program.
I mean, I think the program doesn't make any sense. I mean, it's not a student loan program. Right? It's not a loan to the student. I mean, the whole idea, I mean, the idea for a student loan program for undergraduates run at the federal level, I think the case for that is pretty solid. Right? And the idea that the student is making an investment in themselves and the future earnings increase that they get from the education will be able to pay off the loan, right? And this is why you borrow to invest, is because it sort of makes financial sense. But that's not what the parent is doing here. And the other reason why you have a government student loan program is that the private market, there's some market failures where the market can't figure out who's good risk, who's bad. It's a hard market to price. There's not collateral that you can go after. And so you have a federal loan program for students, but and you may not be able to know if they have credit or not, right? But parents are, they're not in that situation necessarily, right? They've had a chance to establish credit, or if they haven't, that's actually a good indication that maybe they shouldn't get a loan. And so I think that the more you try to figure out why do we have a Parent Plus loan and what's it supposed to be doing, it really doesn't make much sense.
So I think it makes a lot of sense to have a Parent Plus loan. So because the entire financial aid system is built on the idea that up front we will do a need analysis about a family's relative ability to pay. A parent's unwillingness to pay does not necessarily forgive them of the responsibility to pay, to help pay for their students' education. Now, what I don't think makes a lot of sense is the current underwriting on PLUS. And so I think it makes a lot of sense for us to be looking at how much can a parent repay without mortgaging their own retirement or future. And that doesn't currently exist in PLUS. And the backlash that we experienced last time, at least the backlash from NASFAA's side, was bungled implementation. The Department of Education changed underwriting standards in the middle of an award year, in November, without any public announcement. So all of a sudden, parents who had been receiving PLUS loans could no longer get them. You have to pay out the people who are already in the pipeline new underwriting for new students and parent borrowers.
So I just want to say something though. So, but again, so you've got Parent Plus, right? And I just explained how I don't think it makes much sense. And what Justin is suggesting you do to maintain it actually makes it even crazier. Because what you would do is you got a loan, so what he's suggesting is that you underwrite and you figure out, well, who can pay and who can't. Well, what you've done is you've just basically figured out perfect candidates to not get a government loan. Because you determine they can pay. So why can't they go get a loan somewhere else?
I'm not saying private education loan underwriting. I'm saying that you can use no adverse credit for a certain amount of lending. But if you want to expand that lending to the extent that maybe some parents are using it today, you should look at their ability to repay that amount of loan. I'm not saying that you do a federal loan with private education loan underwriting. I do think there's a case to be made for parents to be provided some opportunity for consumer protection and subsidy by providing a federal loan.
So here's where I'm going to go. I'm going to go way to the left of you. I don't think we should have underwriting for parents in the program. Underwriting is kind of anathema to the idea of the loan program, right? So that's why it just none of it fits. The more you try to make Parent Plus work, it starts to look crazy.
The idea that there's no underwriting in the loan programs is just how we label things. There's all sorts of underwriting in the loan programs. You have to be an eligible student, attending an eligible school, in an eligible program, and maintain academic progress. Underwriting is all throughout the loan programs. We just don't call it underwriting.
So I think that may be our time. I would first like to thank the panelists and thank you all for coming out. As you probably understand now, it's a complicated system and there's no easy fix, but hopefully this conversation got us a little bit closer. So thanks again to you all and thanks for coming out.